Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski.
Yesterday, the euro continued to rise against the dollar after statements from Federal Reserve Representative Christopher Waller, who indicated that the central bank is on the right path to stimulate the economy and reduce rates. Weak US data also put pressure on the dollar. Today, a significant amount of important data from the Eurozone is expected. It will begin with data on the services sector, business activity index, the manufacturing PMI and the composite PMI, and conclude with the ZEW economic sentiment indices for the Eurozone and Germany. With poor data and a bearish reaction, we expect to see the first signs of buyers around 1.1740. Only after a false breakout forms can be obtained an entry point for long positions, aiming for recovery to around 1.1768, which could not be broken above yesterday. A breakout and a retest of this range will confirm the correct buying actions on the euro, anticipating a large surge to 1.1793. The furthest target will be the high at 1.1817, where you could take profits. Testing this level will strengthen the bullish market for the euro. In the event of a decline in the EURUSD and lack of activity around 1740, pressure on the pair will increase, especially before important US data, and bears will aim to reach the next interesting level at 1.1711. Only if there is a false breakout will there be a suitable condition to buy the euro. Long positions will open immediately at a rebound from 1.1684, targeting an upward correction of 30-35 pips intraday. Sellers showed up only after yesterday's update of the weekly high. But today, they will have their chance. This opportunity could come from weak Eurozone PMI data or strong US labor market. A further growth in EURUSD continues the trend in the first half of the day. Bears can only rely on the nearest resistance level of 1.1764. A false breakout there will give an entry point for short positions, targeting the support level of 1.1740, where the moving averages align with the bulls. A breakout and settlement below this range against very weak Eurozone data, accompanied by a retest from below, will also present a suitable option for opening short positions, targeting around 1.1711. The most distant target will be the area of 1.1684, where you could take profits. In the case of an upward move in EURUSD following the trend, and a lack of activity bearish action around 1.1768, buyers will have a good opportunity to sustain bullish market development. In such a case, it would be best to postpone short positions until the larger level of 1.1793. Selling there will occur only after a failed attempt to stabilize. A good plan to open short positions immediately on the rebound from 1.1817, targeting a downward correction of 30-35 pips.
Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents.
Today, you could plan to buy the pound at the entry point around 1.3365, targeting a move to 33.85. At the 33.85 point, you could plan to exit long positions and sell in the opposite direction, expecting a move of 30-35 pips from the entry level. Strong growth in the pound can only be anticipated after strong data. Before buying, make sure that the MACD indicator is above the zero mark and just starting to rise from there. You could also plan to buy the pound today if the price tests 1.3350 twice in a row, while the MACD indicator is in an oversold area. This will limit the pair's downside potential and lead to a market reversal upwards. We can expect growth to the opposite levels of 1.3365 and 33.85. You could plan to sell the pound after the level at 1.3350 is reached, which will trigger a quick decline in the pair. The key target for sellers will be the 1.3334 level, where you could plan to exit short positions and instantly open long positions in the opposite direction, targeting a move of 20-25 pips. Pound sellers will return if labor market data is weak. Before selling, make sure that the MACD indicator is below the zero mark and just starting its decline from there. You could also plan to sell the pound today if the price tests 1.3365 twice in a row, while MACD indicator is in an overbought area. This will limit the pair's upside potential and lead to a market reversal downwards. We can expect a decrease to the opposite levels of 1.3350 and 33.34.
That's all for today. See you online soon.